Hey, what's brazy, everybody? It's the Money Man here, and today we're diving deep into the world of investing. Specifically, the people you trust to guide you through it. Because let's face it, the world of investing can feel like navigating a minefield blindfolded if you don't know who to turn to. We're talking about fiduciaries and brokers, two terms you've probably heard thrown around, but might not fully understand. Don't worry, I've been there. The difference between these two can be huge when it comes to your financial future. We're going to break down these two financial gurus, what sets them apart, and most importantly, which one might be your perfect match. Because at the end of the day, this is your money we're talking about. You deserve to know who's got your back and who's just looking out for their own bottom line. So, stick around, hit that subscribe button, and let's get you informed and empowered to make the best financial decisions for your future. Alright, let's kick things off with the term fiduciary. Sounds kinda intimidating, right? Like something only Wall Street hotshots need to worry about. But trust me, it's way simpler than it sounds. In a nutshell, a fiduciary is like that friend who's always looking out for you, even if it means telling you what you don't want to hear. They're legally bound to put your financial interests ahead of their own. Think of it like this. If you're working with a fiduciary, they can't steer you towards an investment just because they'll make a bigger commission. Their advice, their recommendations, everything has to be in your best interest, even if it means less money in their pocket. Now, this doesn't mean they're working for free. Fiduciaries, like everyone else, gotta pay rent. They typically charge fees based on a percentage of the assets they manage for you. So, the more money they manage for you, the higher their fee. Makes sense, right? But here's the catch. And it's a big one. Fiduciaries sometimes have a limited menu of investment options. Think of it like going to a restaurant with amazing food, but only a handful of dishes on the menu. They might not have access to every single investment product under the sun, but the ones they do offer, you can bet they've been vetted and scrutinized to make sure they're the cream of the crop for their clients. Now, you might be thinking, Graham, this sounds too good to be true. What's the downside? Well, because fiduciaries often provide personalized advice and really take the time to understand your financial goals, they might charge higher fees compared to other options out there. But honestly, think of it as an investment in your peace of mind. You're paying for expertise, for someone who's legally obligated to act in your best interest. And that, my friends, is priceless. Let's dive a bit deeper. Fiduciaries are not just about investments. They can help you with a wide range of financial planning needs. From retirement planning to tax strategies, estate planning, and even budgeting, they cover it all. Imagine having a financial expert who knows your entire financial picture and can guide you through every major financial decision. This holistic approach ensures that all aspects of your financial life are working together towards your goals. And because they are fiduciaries, you can trust that their advice is unbiased and solely focused on your best interests. Another key aspect is diversification. Fiduciaries will help you spread your investments across different asset classes to minimize risk. This means not putting all your eggs in one basket, which is crucial for long-term financial stability. They stay updated on market trends and economic changes, ensuring that your investment strategy adapts to new conditions. And it's not just a one-time thing. Fiduciaries provide ongoing support and adjustments to your financial plan as your life and goals evolve. So whether you're planning for a major life event or just want to ensure a secure financial future, having a fiduciary by your side can make all the difference. Remember, it's about building a relationship based on trust, transparency, and a shared commitment to your financial well-being. So, next time you're considering financial advice, think about the value of having a fiduciary in your corner. It's not just about managing money, it's about securing your financial future with someone who truly has your back. And that, my friends, is the essence of putting your financial interests first. Now, let's talk brokers. These are the folks who are essentially the middlemen of the investing world. They play a crucial role in connecting investors with the right financial products and opportunities. Imagine them as personal shoppers for your investments. Just like a personal shopper knows your style and preferences, a broker understands your financial goals and risk tolerance. You tell them what you're looking for, and they go out and find it for you. Whether it's stocks, bonds, mutual funds, you name it. They have the expertise and resources to navigate the complex financial markets on your behalf. They're like that friend who knows everyone and can get you into the hottest clubs. In the investment world, this means they have access to exclusive opportunities and insider knowledge that can be incredibly valuable. Brokers have access to a huge range of investment products, which can be both a blessing and a curse. The sheer variety can be overwhelming, but it also means you have more options to choose from. On one hand, you've got options galore. This can be particularly beneficial if you're looking to diversify your portfolio and spread your risk across different asset classes. Want to invest in a tech startup developing flying cars? Or perhaps you're interested in green energy projects or emerging markets. A broker can probably make that happen. They have the connections and the know-how to get you into niche markets and innovative ventures. But here's the thing, and this is crucial. Brokers don't always have to put your interests ahead of their own. This is a fundamental difference between brokers and fiduciaries. They operate under a suitability standard, which basically means they need to offer you investments that are, well, suitable for your situation. Sounds reasonable, right? But there's more to it. But suitable can be a pretty subjective term. What one broker considers suitable might not align with what another broker thinks, and it might not be the best option for you. What's suitable for one person might be a terrible investment for another. This is why it's so important to have a clear understanding of your own financial goals and risk tolerance. And that's where things can get a little murky. The lack of a fiduciary duty means that brokers might recommend products that are suitable, but not necessarily the best for you. Because brokers often make money through commissions, there's a potential for conflicts of interest. They might be incentivized to push products that earn them higher commissions. Let me give you an example. Imagine you walk into a broker's office wanting to invest in a low-cost index fund. A solid, boring, but generally safe investment. It's a great way to get broad market exposure with minimal fees. But the broker also has a hot new tech stock they're pushing that pays them a hefty commission if they sell it. This stock might be riskier and not align with your investment strategy. See where I'm going with this? The broker might be tempted to recommend the tech stock over the index fund because it benefits them financially. Now, I'm not saying all brokers are shady characters looking to rip you off. Many brokers are dedicated professionals who genuinely want to help their clients succeed. There are plenty of ethical, trustworthy brokers out there who genuinely want to help their clients build wealth. They take their responsibility seriously and strive to provide the best advice possible. But it's important to go in with your eyes wide open and understand the potential pitfalls. Being informed and asking the right questions can help you make better decisions. One of the biggest advantages of working with a broker is that they can offer a wider range of investment options compared to fiduciaries. This can be particularly useful if you're looking for specialized investments. Remember that limited menu analogy? Fiduciaries might have a more limited selection of products, whereas brokers can offer a broader array of choices. Brokers are like the all-you-can-eat buffet of the investment world. They can provide access to a wide variety of investment opportunities, from traditional stocks and bonds to more exotic options. They can also be more affordable, especially for smaller investors. This is because brokers often earn their income through commissions rather than charging a percentage of your assets. Since they often make money through commissions, you might not have to pay a fee based on your assets, which can be a big plus if you're just starting out. This can make investing more accessible for those with limited funds. But remember, those commissions can add up, and they might incentivize brokers to recommend products that aren't necessarily in your best interest. It's crucial to be aware of how your broker is compensated and to ask questions about any potential conflicts of interest. By understanding the dynamics of the broker-client relationship, you can make more informed decisions and choose the investment path that best aligns with your financial goals and values. So, there you have it. The battle of the financial gurus, fiduciaries versus brokers. Both have their pros and cons, and the best choice for you really depends on your individual needs and preferences. If you're someone who values personalized advice, wants someone legally obligated to put your interests first, and is comfortable potentially paying higher fees for that peace of mind, then a fiduciary might be your perfect match. Fiduciaries are bound by law to act in your best interest, which can provide a sense of security and trust. They often offer comprehensive financial planning and can help you navigate complex financial decisions. But if you're more of a hands-on investor, want access to a wider range of investment options, and are looking for potentially lower fees, then a broker could be the way to go. Brokers can offer a variety of investment products and may have more flexibility in their offerings. They can be a good fit if you prefer to take a more active role in managing your investments and are comfortable with the associated risks. At the end of the day, the most important thing is to do your research, ask questions, and choose the financial professional that you feel most comfortable working with. It's crucial to understand their fee structures, services offered, and the level of support they provide. Don't hesitate to interview multiple advisors to find the right fit for your financial goals. Because when it comes to your financial future, knowledge is power. The more informed you are, the better decisions you can make to secure your financial well-being. Don't forget to smash that like button if you found this video helpful, and be sure to subscribe for more financial tips and tricks. We regularly post content to help you navigate the complex world of finance. Until next time, take care and happy investing. Remember, your financial journey is unique, and the right advisor can make all the difference.